the powers that be in America got together. And this is literally something they did. They got together in Paris. And in the beginning of 1985, they had a meeting called the Louvre Accord. This meeting was held by the heads of several major countries. And in this meeting, there was the U.S., who called the meeting, with the heads of Germany and France and the UK. And the heads of these countries got together with one sole goal. It was to crush the U.S. interest rate and to bring it to zero, which would force the American public to empty their bank accounts, become a spender nation, and an investor in their markets. The other goal was to crush the U.S. dollar. In the beginning of 1980, the dollar began to soar. A soaring dollar only benefits the American citizen. Every American citizen is benefited by a rising dollar because you put a dollar in the bank and several years later, without doing a thing, that dollar's worth $1.20. A rising dollar helps you. A rising dollar helps me. But it doesn't help another type of citizen in America. That's the corporate elite. You see, what benefits the vast majority of corporations is what? A declining dollar. And so this had to change as well. In that same meeting in 1985, the goal was to crush the U.S. dollar. And ever since 1985, the dollar has been eroding in value, melting like an ice cube, second by second, tick by tick. Now, if I told you that if you earn a U.S. dollar and you save that dollar, 5 years from now, it's going to be worth 80 cents, would you save it? No. Instead, you spend it or get rid of it. Because if you don't get rid of it and use the current value of the dollar today, you'll have less to spend later. Now, this, in my opinion, is the greatest sin that could ever be exercised on a people. It is financial slavery. It is a system that has been designed to make you earn, but to give it all back. And if you don't give it all back, you're penalized with a tax that is far greater than traditional taxes. You're penalized with the tax of inflation. Now, I teach my traders, I teach my wealth traders in particular, the dynamics of all of these things and how they should affect virtually every single action you make in the market. There are protective ways to protect yourself, your family's wealth, all right, your family's income, all right, very simple ways, and these ways have been exercised by the traditional wealthy families and large organizations for years and years. The average citizen has no idea that they are a hamster running in place. And what I'm going to share with you today are several simple strategies that will help you at least be aware that there is an assault on your capital. There is a war being waged against wage earners every single day. Now let's talk about this a little bit. For the benefit of those in internet land and here who have no idea who I am, my name is Oliver Velez. I have been in this industry long enough to be considered somewhat of a relic. 24 years, almost 25 years. I have, over the last 18 years, probably taught more traders worldwide than anyone in this entire industry. I have taught several 100,000 traders have actually paid me over this time span to teach them how to navigate the markets professionally. I have taught millions in my speeches and talks all over the world. My seminars have been conducted in virtually every continent on the planet and in 7 different languages. I'm the author of some of the best-selling books on the market, Tools and Tactics of the Master Day Trader, which was published by McGraw-Hill in 2000. is one of the best-selling trading books of all times. It sells in 7 different languages, as well as all the others. OliverVelez.com is one central site of mine that focuses predominantly on the approach of wealth. I believe wealth is the crowning jewel of every single market player. There are 2 broad ways to play the market, one for income and one for sustainable wealth. But both sort of, the income's purpose is to build wealth as well. All right? And I believe that most traders actually think they consciously should make a choice and just be one. But the goal is to become an income trader with the purpose of becoming a wealth-oriented trader as well. All right? I have one of the largest trading teams in the world. I have over 3,000 traders that trade every single day, some 24 hours a day. These 3 trading teams are broken up into these categories. I have 2,100 plus equity traders that I personally fund. These traders are in China, India, the US, Latin America, Canada, Mexico. I have 950 foreign currency traders that literally trade in teams 24 hours a day. These traders are also personally funded with my capital. I have 335 wealth traders. They are self-funded. So some of the ones that make income from these categories use that income to generate wealth with several of the wealth strategies I'll share with you today. My goal, obviously, is to grow my trading team to a number around 5,000. And you can see that there are some relatively modest but somewhat lofty goals here. With 5,000 traders, if they all averaged $100 a day, that's $500,000 each day, which translates into $2.5 million a week, which translates into $130 million a year. That's only $100 a day. That's a layup. 5,000 traders earning $500 a day jumps that annual number to $650 million a year. Now, a lot of people don't understand this as they say, Oliver, well, wait a minute. You've got 3,100 traders. You must be making a killing. Your traders have to be averaging $100 a day. Well, listen, this is how it works. One trader might be up $8,000 on the day. Another trader might be down $4,000. Another trader might be up $600. Another trader might be down $800. I just want the net average per trader to be several $100s a day. And we're getting there in a hurry. Each one of my traders works through a 12-step program that leads them from starting to trade with $10,000 all the way to $2 million. My traders start to keep 80% of any profits they make, and as they progress, they go all the way up to keeping 95% of the money they make with my own capital. All right? The way it works on the street is that when you have a talented trader, you've got to pay him more and more. Otherwise, they'll pat you on the back and say, thank you for changing my life. I've got my own money to trade now. It's the way it works. All right? But I want to talk to you today about the assault that's going on in the U.S. dollar, which in effect, if you're an American and you earn a dollar, or if you have a business and you earn dollars, there's an assault on you as well. Now, take a look at this. This is very alarming. For those of you out in internet land, you can go to this site, usdebtclock.org. And when you go to this site, you'll see these numbers changing rapidly right in front of your eyes. It's hard to see the number here, but I want to point out several things here. I want to point out if you can look carefully, I want to point out what the debt per taxpayer is. If you're a taxpayer, your debt as a taxpayer is $130,000. Now, whenever you want to start paying it back, you can. But this is your personal debt as an individual. That number is probably underestimated. All right? The U.S. national debt is estimated at $14 trillion. But look at this. The U.S. unfunded liability is $114 million. Here, $114 trillion. I got to get used to saying the trillion part. The liability per taxpayer, per you, per me, per you, sir, is $1 million. Now, there is no way that every American is going to actually contribute $1 million to this. There is no way. It's impossible. All right? Now, look at this. This is a long-term chart of the U.S. dollar index. And we're going all the way from 1971 to 2011, long-term chart of the U.S. dollar. As you can see, in the beginning of 1980, the dollar came from a relatively low level and began to skyrocket for several years right into 1985. A rising dollar helps every U.S. American citizen, but it does not help corporate America. This became a very big problem. So in 1985, as I mentioned before, right, the Plaza Accord was reached, and the design was to crush the U.S. dollar. And instantly, the dollar lost 51% of its value in less than 2 years. This proved to be so beneficial to the elite citizenship of America that the policy remained to keep the dollar in an erosive state. Now, some of you may not quite understand what the negative effect that this has, but we'll understand in just a moment. Here's another site, Bureau of Labor Statistics. A dollar in 1913 was worth $22.35, which tells you that over the last several decades, we've lost 96% of our purchasing power if you earn dollars. 95% of the purchasing power has evaporated. From 2000, a dollar in 2000 was worth 30 cents more. So in a little bit more than 10 years, there's been a 30% haircut on your wealth, your value, your dollars. 30%. Now look at this. Let me show you what's happening all over the world today. BRICS is the term that stands for several major powerful economies. These are the most powerful economies in the world today. Brazil, B stands for Brazil, R for Russia, I for India, China, and South Africa. Now these countries make up an organization called BRICS. BRICS, right? I want you to read this. Thursday signed an agreement to use their own currencies instead of the predominant U.S. dollar. The most powerful economies in the world decided that we will not use the U.S. dollar anymore. We know we're supposed to. We know the U.S. dollar is the world reserve currency, but we refuse to use the dollar anymore. So amongst ourselves, we're going to use our own currencies. Look at this. BRICS represents 40% of the world's reserve currencies. Now, I know this might sound vague here, but we'll get to the point. BRICS countries have finally decided to dump the U.S. dollar in their trades and instead issue credit lines in local currencies after meeting in Beijing. Check this out. China, Russia quit the U.S. dollar. China and Russia gets together and say, listen, we know the rules say that we're supposed to use the U.S. dollar in all of our international transactions, but you know what? Forget the U.S. dollar. Let's quit it. Let's just use our own currencies. Now, look at this. China, Russia. China-Russia currency agreement further threatens U.S. dollar. Now, we're going to lead somewhere here. Mexico, our partner. Mexico. The U.S. dollar has always been a sister currency to Mexico. It's just as good as the Mexican peso, right? Not now. All right? Mexico has always considered the U.S. dollar almost a secondary currency to the peso. The Mexican government, in September of 2010, enacted a new law which basically restricts the use of U.S. dollars for almost all purchases inside of Mexico. You can't even go to a Walmart in Mexico and use a U.S. dollar anymore.